Today, Bitcoin jumps back to $99,000 after better than expected inflation data. Senator Tim Scott lays out the Senate Banking Committee's priorities for digital assets. And Alan Orwick of Quai Network discusses how the economy is driving crypto prices. Welcome to CNBC's Crypto World. I'm Katie Tarasov. Crypto markets in the green after new economic data showed the prices consumers pay for a number of goods rose less than expected in December, providing some relief for investors worried about inflation. As of noon Eastern, Bitcoin climbed 3.5% to $99,000. Ether jumped 4.7% to $33.40, and XRP spiked more than 11%. At one point, it reached a record high of $3.03, but settled at $2.90 by noon. Okay, let's talk about the top stories. Ongoing tensions between Swan Bitcoin and Tether are escalating. Tether is suing Swan Bitcoin in English courts for matters related to a joint crypto mining venture, 2040 Energy, telling CNBC that Swan's actions have resulted in significant breaches and that this step was taken to protect its investment. A spokesperson for Swan acknowledged it received a lawsuit regarding control of a mining subsidiary and that it would not be appropriate to comment at this time, but will vigorously defend all its rights. This lawsuit comes after Swan Bitcoin sued a group of former employees in September, alleging they stole the company's Bitcoin mining plans. That lawsuit claimed Tether, which was not a defendant in that specific case, helped the ex-employees with legal cover. Next, Republican Senator and Senate Banking Committee Chair Tim Scott says crypto regulation will be a priority for the Banking Committee in the 119th Congress. In a memo published today, the senator said the committee would prioritize developing a framework for digital assets, and that SEC Chair Gary Gensler refused to provide the industry with clarity. Senator Scott said the committee would be open-minded toward new products that promote financial inclusivity, like stablecoins. Other priorities listed include protecting our economic national security and advancing affordable housing. All right, let's go back to markets for our main story. With Bitcoin and other digital currencies on the rise, Crypto World's Jordan Smith spoke with Alan Orwick, co-founder of Quai Network, to discuss how long the rally can last.
All right, Alan, thank you so much for being here. I want to start with markets. And we saw this rally in Bitcoin in the past couple of days, really centered around two key points of economic data. We've got PPI and CPI, both showing inflation is coming in lighter than Wall Street was expecting. And obviously, that's good news for risk assets broadly right now. Investors have started to pay closer attention to the economy. And I'm wondering if this is sort of the future that crypto's in for right now. Everybody's going to be focused on the economy, and every key point of inflation data or economic data is going to really drive volatility for the market.
Yeah, Jordan, thank you for having me on, and definitely a great topic to start with. Inflation actually came in, met expectations at that 2.9% year over year. That's down significantly from that 9.1% hit in 2022. So there's a lot of optimism in the markets right now around risk on assets and people that are looking to go further on the risk spectrum. I think right now it opens up a good window heading into Trump's presidency and allows for people to consider things in a lower interest rate environment. That's been the main concern, having that mark in September of the lowest interest rate in the past few years and having that rise significantly since then. So now it's a matter of reevaluating what will interest rates do as we head into 2025 further, and we can reassess where assets stand.
We heard from Senator Tim Scott earlier today saying in a release that a priority for Congress would be a framework for digital assets. We've heard talk about stablecoins. What are the primary areas of focus that you expect both Congress and President-elect Trump to focus on? And what's the sort of timeline that you're expecting for some of those to move forward?
Yeah, great question. I think if we look back on the Biden presidency, a lot of it was rife with concern and the lack of regulation and even enforcement of digital assets in a way that shooed away developers, people like myself and people working in cryptocurrencies that went to places like Switzerland or went offshore to Dubai. And so now it's a matter of bringing these people back. So that should be the number one priority, is giving these developers a home to ensure that they can create these cryptocurrencies and innovate in an area that is traditionally scrutinized and regulated via enforcement by the likes of Gary Gensler, who's so popular in this space. So now I think it's a window of opportunity for people like Paul Atkins to come in, create regulatory guidelines, do things like repealing SAB 121, getting cryptocurrencies to not be liabilities on companies' balance sheets, bringing in new regulation through FIT 21, getting that through the Senate, and having the ability for the CFTC to take more jurisdiction of crypto assets, regulating them as commodities, because Bitcoin itself is a commodity-like asset. We call it digital gold because it has gold-like properties and characteristics. It's physically mined, it has an energy proponent, and it has a consumption-like guarantee that looks something like gold. And with its fixed supply and fixed cap, it actually has some properties that might be better than gold. So that is the part in which I think the regulation is going to come to fruition, getting some of those initial bills through, and then again, reevaluating new proponents in legislation like stablecoins and creating useful legislation for that, for them to be utilized for payment rails.
I mean, there is a lot there. Talking about payment rails, talking about figuring out infrastructure and what a digital assets market in the US looks like. There's also an education gap that comes with that, getting senators who may have been skeptical in this previous administration or in the previous Congress to get on board with that. What does that timeline look like for you? Do you see that moving faster than maybe it has in the past, given the environment we're in now?
Yeah, I think right now we're especially seeing a lot of youth in these cabinet picks by Trump, and we're seeing a lot more youth come in that have a very fervent knowledge of crypto technology. And we're seeing the education of congressmen and congresswomen and senators and people that are in politics actually get on chain, use this technology, and become more aware of it. I think we actually have congressmen that are trading meme coins and having to mark that as publicly listed available assets. So I think we're starting to see that shift to people that are more comfortable with it. And again, as Bitcoin approaches this 100K number, it reestablishes and reconfirms that store of value and that staying power of Bitcoin, making it more comfortable for people that are in politics to not necessarily take as big of a jump as they would have had to in the years past. And then again, with that legislation and with a friendly administration to these cryptocurrencies, it's really clearing the way, and it's giving them the opportunity to explore and reevaluate in some of these lower levels to say, how should we treat this technology? Can I actually use it? Is it safe to use? The education of getting people on chain, because crypto itself, again, is a completely new financial system. It's separate from the traditional banking infrastructure that we're used to. And there's a lot more emphasis on this idea of self-sovereignty, having to manage your own keys, having to manage your own wallet. And there's a level of risk and security guarantees that are required. And I think actually, as we tie that back into regulation as well, providing banking infrastructure and more user-friendly infrastructure that people are used to will ease some of that, again, creating a positive feedback loop for this industry to continue to grow.
One quick final question. We talked about price. We've talked about regulation. As a founder in the crypto space, what else are you watching in 2025 that we should be paying attention to?
Sure. I think 2025 will be the year of stablecoins. That's an emerging $1 trillion industry with the current stablecoin market cap representing about 10% of total crypto market cap. And that sits at $170 billion of stablecoins issued on chain. So I think we're going to see more and more people be able to directly use stablecoins and have them in a way that is able to look like the Visa and MasterCard solutions today. And there's a ton of drag on the economy from these solutions like Visa and MasterCard that continually take rips from your transactions. And if we were to simply move that billions of dollars out of that and allow for more seamless global payments and ways of which that you can transact with commerce, I think that's a huge win for the American consumer and people that can use these stablecoins in a way that aren't just in America, but in other parts of the globe, again, reinforcing the strength of the US dollar. On top of that, I think AI is a huge trend that's going to continue to emerge. There's this fight for energy and consumption of energy to create and train these AI models, and having these AI models interact with crypto in a way that's seamless and again can reinforce the education and the ways in which people use this technology potentially through AI will be a way that makes crypto more user-friendly.
If I can follow up on that really quick, we are seeing, I feel, what feels like some sort of turnover in the stablecoin market. You're seeing Tether move to El Salvador. You're seeing, Circle really tout how much growth it's seen last year and its embrace of Mika and what could happen in the U.S. I'm wondering if the established stablecoin players are the ones to really watch, or if you'll expect, some of the more traditional finance corporate players to come into this space. We've talked about PayPal, which has its own stablecoin. You had Ripple, which launched its own stablecoin. What are we supposed to be paying attention to there versus established players versus corporations that could come in and launch their own?
Yeah, I mean, there's definitely a whole spectrum of stablecoin possibilities. I think if you were to talk to a crypto OG, they would say DAI and these decentralized stablecoins are the future in a way that can actually use the more crypto native assets. And then in terms of more recent market news, you have things like the Bridge acquisition by Stripe. And so bringing that more into Web2 players. So there's going to be a Cambrian explosion of stablecoins and different types of designs and approaches that people utilize to ensure that they can essentially represent stability on chain. And you referenced MiCA as well, and the concerns with Tether being banned in the EU and places like having to reinforce different types of dollar stability that they want to represent. Is that a euro? Is that yen? Is it the US dollar? So I think central banks are going to be scrambling to find ways to represent their currencies on chain. And we want to see the US dollar continually being reinforced in this way, and having that stablecoin design in a way that consumers get to choose, whether that's through PayPal USD or other solutions like Circle or Tether, I think will be market driven and give them plenty of options to choose from. So it's just a matter of what is the most secure and what is the most reliable over time.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.